Why do libertarians hate banks so much? Well, first of all, I use the word libertarian a little bit loosely, and really what I'm just using it as is a placeholder for anyone who believes in personal, financial, and location independence, like we do. Next, libertarians don't really hate banks, although the general bureaucracy, invasion of privacy, and the control over our assets do not exactly give us a warm, fuzzy feeling. I mean, banks used to have a useful place in society, but today there are multiple alternative options to using traditional banks for basically anything under the sun. And that's what more and more millennials and Gen Zers are already starting to do. But no, libertarians don't actually hate banks. What we hate is central banking. And today on Renegade News, we're discussing exactly why we hate it so much. Welcome back to Renegade News. I'm your host, Glenn Kowalski. Every week on this channel, we discuss the latest news, strategies, and tactics for breaking free from the system, paying less tax, and living anywhere in the world that you want. So let's just jump in with the biggest, baddest bank of them all, which is the Federal Reserve. I mean, they are as federal as Federal Express, which means not at all. They're really the epitome of crony capitalism. They consist of presidentially appointed bureaucrats and privately held banks, and it has almost no substantive congressional oversight. So why do I think that's a bad thing? Well, because none of us know if the system is actually working or not. We're supposed to just take their word for it, like we take their word for anything else. And also because of inflation. The simplest way to think about the Fed is that it's an organization that systematically defrauds the American public by unpredictably and unevenly inflating the money supply. The policy of the Federal Reserve System is to approve the printing of money when the money supply is low. So that means when the banks themselves are over-leveraged, and that causes inflation and lowers the purchasing power of everyone else's money. But do you know who benefits from that inflation? Well, the first ones who get a hold of that newly printed money. And do you know who that is? Well, of course, it's member banks of the Federal Reserve, their friends and their cronies. President Nixon took the USD off the gold standard and made it a floating currency. And if the US dollar is backed by nothing and the real reserves are backed by the US dollar, well, intrinsically, that means that all currencies are backed by nothing tangible except for trust in the American government. Money backed by nothing is known as fiat currency. And that means that the government says it's money, so it's money. And a consequence of money backed by nothing is that whenever the Federal Reserve prints more of it, it dilutes the currency supply of all other nations because their reserves are all backed by US dollars. So if every currency on earth is backed by nothing, how are we able to pay for things? Well, the economic system is working because of the faith that you can exchange your unit of currency for goods and services. And a big part of that faith comes from the fact that not many people actually know where money comes from. When the government needs more money than they receive from taxes, then they ask the Treasury Department to issue bonds, and it gives them to the central bank in exchange for printing money that can be used for government spending. So where does the central bank get its money from? Well, nowhere. I mean, when you and I write a check, there has to be sufficient funds in the account to cover the check. When the Federal Reserve writes a check, it's creating the money out of thin air. They are essentially writing checks to take money from an account that literally has nothing in it. So all of the money in the US is created by the Federal Reserve, right? Well, no. A vast majority of the money in circulation today was created by commercial banks. There's this common misunderstanding among people that when you deposit your money in the bank, that they look after it for you. That's what we were always taught our whole lives. But the reality is that the banks own the money now, and they promise to return it to you when you ask for it, essentially giving you an IOU. Now, there's people who have a slightly better understanding of the banking system, and they believe that the banks take money from the savers and then they lend it out to the borrowers. But that isn't a complete picture either. When more loans are given out, more money is created, and the rest of the money in circulation is worth less than it was, and that's what results in inflation. Today, creating money is just typing numbers into a computer, and 97% of all US dollars that are created now are created digitally like this. There's really only 3% that's actually in circulation as the notes and coins that we think of as money. Commercial banks use what's known as fractional reserve lending, which allows them to lend out 10 times more money than they actually have in the reserves. So the Federal Reserve, which is your central bank, and all commercial banks have control of your money. And the only reason that money has any value is because your government says so. So let's see how this works in practice. So let's say that Steve wants to buy an expensive car for $90,000. He wants to take out a loan for that. Now, Mark, on the other hand, has deposited $100,000 in that same bank. The bank will keep $10,000 in its reserve in case Mark comes asking for it. And then he lends out the $90,000 to Steve by digitally depositing the amount through an account in his name. Well, assuming that Steve pays back his loan, then Steve and Mark together can actually spend $190,000 even though the total money in the system is only $100,000. The bank also receives interest on $90,000 USD that doesn't even exist anymore. If Steve defaults, then the bank has lost $90,000. In other words, the newly created money stays in the system until Steve pays it back or until Steve defaults. So what can banks do with your money? Well, for someone not familiar with the topic, it reads like this weird question to begin with. After all, it's your money, right? You should be able to do whatever you want with your money, not what they want. But your bank knows any incoming or outgoing transactions happening in your account, and they monitor them to prevent suspicious activities. And because of this, they're able to block their transactions on the fly if they raise any red flags. Now, somehow the banks and the NSA are increasingly sharing this similar assumption that everybody is a suspect and a potential terrorist or money launderer. So everybody should be monitored at all times. And that's happening more and more. So meanwhile, while the bank can print money out of thin air, loan out money it doesn't have, you don't even have the access or the rights to use your own money. Well, maybe it's time that you start to think about unbanking. And we'll talk about that more in other videos, because unbanking requires strategies ranging from cryptocurrency to internationalization, which is why you really should subscribe to Renegade News right now. That way, every week you'll discover the latest strategies for finding more freedom and liberty in this unfree world. And while you're here, don't forget to check out the video that you see on the screen right now for the latest crypto, business growth, and internationalization strategies. I'm Glenn Kowalski from Renegade News, and I'll see you over there.